Well, those are the headlines that we are going to be tracking for you all evening on ET Now, and of course, along with that, getting you snippets from the exciting India Economic Conclave event that's currently ongoing in Delhi. Well, let's first up introduce on the show Mr. Pankaj Mathpal, the MD of Optima Money Managers. Mr. Mathpal, thank you so much for taking our time today, joining us on the Money Show. To start with, these last few days, if you heard me earlier, we were just highlighting about how there's been so much volatility in the markets. And when I say volatility, we've literally seen 3 consecutive days where the market has fallen more than 1%, and only today finally there's been a recovery of 1%. So there's massive movement seen in the equity markets. Now, as a retail investor in the equity markets, should I really be worried about it, especially if my view is long term?
Mubina, thank you very much for having me on the show. And volatility, Mubina, we understand it's a nature of market. It's a nature of equity market. So if we saw a rally in the market after that, it was quite expected that there will be some correction. And because of this expiry of F&O, that was one reason. Second thing, that corona cases are surging. That is another reason that for some dip in the market. But if we see for long term, it's a time to invest actually. Investors should not worry about the volatility. They should consider it as an opportunity. If they were worried to invest at the market when the Sensex was above 50,000 and they are getting an opportunity to invest, it is better. If you are already invested in the market, stay invested for long term, definitely you'll create wealth. So retail investors especially should not worry about this kind of volatility. And I'll say, even if it is possible, you should top up your investment. That is better. But never think of exiting from the market when you see this type of correction in the market.
Okay, never exit when you see a correction of this kind in the equity markets. So, Mr. Mathpal, what should, a retail investor strategy be? I mean, like you mentioned, right, the market had run up very significantly and then we saw a correction come by. So, do you think that this is an opportunity offered to equity investors that, okay, maybe you could, increase your exposure to equities or increase your SIPs of that sort?
Exactly, Mubina, that is what I want to say, that it is an opportunity because there are many investors who wanted to have more exposure in equity or they wanted to enter first time, but only worry was that market was very high. They were waiting for this, that there should be a right time when the market falls and they will enter. So now this is the time. I'm not saying that market cannot go further down a little bit, but still invest in staggered manner. If you have 1 lakh rupee, start investing with 10,000 rupees or otherwise as SIP, STP. These are the best ways to invest in equity market in staggered manner. So if you want to invest in lump sum, do not invest whole amount together. Invest in part. And if you can opt for SIP, STP, that is the best choice. And if you are existing investors, if you are investing through SIP for long term, if you have money available with you, it will be better that if you increase your SIP amount, you top up it. If you are not increasing SIP amount, even in the same scheme, you can invest some more amount for one time. That can be another strategy. So you can top up that amount. But it is a time, and every correction you should consider that it is an opportunity for long term. But remember one thing, if you are investing in equity mutual funds or equity shares, always set your financial goals, and for long term, with your long term horizon, you should invest in equity.
So in the long term, ensure that you invest in equities. And yes, I think the operative word here is also long term, because when you invest in equities, you have to have a very futuristic time horizon in mind, so that this kind of volatility, the kind that we are seeing right now, does not really affect you. Mr. Mathpal, let's say if somebody's goal is coming nearer and he or she is faced with this kind of volatility, what should then that individual do?
See, if the goal is very near, then you should try to rebalance your portfolio. You should definitely switch some funds from equity to debt or some other. fixed deposit, or if it is very near, you should try to book that profit or exit. But if you are a long-term investor, if suppose you have even 1 year time still left to achieve your goal, in that case also I'll suggest that you should start switching from that equity to other safe or less volatile instruments systematically. So that can be an idea. But again, if you ask me this question that if somebody has already achieved goal or very near to that, it means the investor was investing for quite long time. Because as if the advice is to invest in equity for long term, it means the person, if the investor who is near to the goal, they must be investing for a long time. And in this case, they must have made good money. So maybe that little bit down, if they would have invested few days ago when the Sensex was above 50,000 and today it is below 50,000, there may be a little bit loss to that portfolio. But overall, if the investor has been investing for a long time, then definitely they will be reaping the benefit, they will be booking profit.
When you are in a bull run, if you could call it that. But Mr. Mathpal, I suppose one can't really help notice the fact that there is once again a massive resurgence in COVID cases. When that happened last year, the market fell extremely drastically, though of course since then the recovery also has been excellent. So keeping that in mind, and given the fact that we are in a situation that keeps changing every other day, an investor will probably bring that point that this is the time when the market really changes every single day. So how would you reassure such a person that don't bother tracking day-to-day moves in the market?
Mobina, see, we have seen this from last March to this March. In 1 year, market has almost doubled, and in many mutual fund schemes, they have delivered 70-80% return, even more than 100% also in some schemes. So that does not happen very regularly, but what we saw in last 1 year was really something unexpected, and investors made money. But as you asked that what should investor do, the whole idea is that one should maintain proper asset allocation. So one should not be very greedy when you see this kind of returns, or one should not be very fearful. Whole idea is that one should maintain proper asset allocation. So if suppose you have 50% investment in debt, 50% equity, and equity markets are not doing well, or you see a good correction or market crash, in that case also you'll not lose whole of your investment. So maintain proper asset allocation. You should have, as per your objective of investment, risk appetite, time horizon, you should maintain allocation. And right now also, if you are seeing that you have made good profit, your portfolio equity allocation has increased because of this good returns. So you should rebalance it so that if this kind of correction comes in near future also, you should not lose your investment.